Hello and welcome to today's video, which is called Non-Farm Payrolls Scoop, and it was a scoop for all clients, be it swing or intraday. So let me help you prepare for the coming trading days and what I see unfolding in the stock market ahead. Today's video would be an analysis of execution, how it was coming and going within S&P 500 and Nasdaq, and of course it would fit a longer term perspective. Remember that being subscribed on my site is the basis just as much as following me on Telegram and Twitter. You are already familiar with this Friday's tweet that pretty much summed up what had been communicated clearly in our intraday channel. Let me read out the final parting paragraph. Before non-farm payrolls, I did not look for much decline in risk-taking appetite, and the strong figure that I expected was though to clean the clock of rate cut expectations for March and force markets into a tailspin, into a risk-off period lasting several hours. The below tweet link clearly demonstrates that, and in case you had been subscribed on my site, you had been getting the communication before non-farm payrolls were announced. This is the chart with the arrow pointing to where on the 30-minute one in ES S&P 500, where the decline was starting to decelerate, and any lower part of the red candle formed a reasonably good enough entry position on the long side. And so it was executed in our channel, where I called for both ES and NDX longs at roughly the same position on the chart where this red arrow is pointing. Moving on, you see after a breakout of the pre-market range, backtest of the area and building a base above it and continuing slowly higher before this profit-taking period came. Does it mean that this is the end of the upswing, be it in the 500 stocks strong index or in Nasdaq? Not really. This is the same view captured on a 4-hour chart with the red arrow pointing to the non-farm payrolls gyration. Pretty much a blip on the screen, and the final candle, that's not a reversal one, that's nothing to fear. We are likely to enter Monday on a cautious note, consolidating sideways because the gains of Friday had been pretty much uneven. So the final top has not been made, but the bulk of the upswing of the late October lows that I had called for you, be it in swing or especially in day trading, where it is kind of more feasible and more realistic to seek to strive to capture every market gyration. We are in the latter innings of that upswing. So stay tuned for the nearest upcoming analysis, where I will dive, of course, into the broader stock market perspectives, including sectoral ones. Sidestep supply, you all of course know me, so thank you for liking, commenting and subscribing to this channel. And finally, the obligatory disclaimer before my wishes for a nice weekend and close this presentation. Thank you and talk soon again.